ED, SEBI, Pranav Haldia, MD, Prime Database Group on the phone line, and also Sandeep Parekh, partner, FinSec Law Advisors. Thank you so much to all of you. Welcome to NDTV Profit. This is an exciting time. Big announcements coming in. J.N. Gupta, sir, from your experience at SEBI, how are you viewing the recent proposal to relax the minimum public shareholding norms? What impact do you think this is going to have on market liquidity and investor confidence?
Thank you for having me here, and good evening, my fellow panelists. See, the issue that SEBI has addressed, that lot of time, very big companies, say for example, we had an issue of LIC. And LIC, the size of the issue was such that it was very difficult to absorb the entire, if suppose 25% or 10% were to come to the market, it would be very difficult to absorb such a large capital into the market in one issue. So SEBI has addressed this. So this will help big companies. If in future a company like Tata Sons want to list, probably it will be incentive for the Tata company to list. And liquidity issue, I have always been maintaining liquidity does not come by percentage. Liquidity come by number of shares that are there in the market and number of shareholders. So since the retail quota is not being disturbed, so the retail will be there in the market and people will be there. So when you say LIC with such a large market cap and such a large number of equity versus another company which has a low market cap. So you can't compare the liquidity by percentage because LIC would be having millions and crores of shares where other company may be having lakhs of shares. So that way it's a one welcome step. It may add to more listing of big companies who till now were afraid that probably the issue will not sail through because of the large amount of issue were made at the one go.
Right.
So that is there, but we have to see it, how it pans out.
Okay. So I'm going to bring in Pranav Haldia on this. Pranav, we're looking at many new age companies backed by private equity, venture capital, already having significant public shareholding at IPO. But this move, do you think that the minimum public shareholding requirement now is going to then become less relevant for certain sectors, or how are you viewing this?
Well, absolutely. I think one of the points which is also mentioned in the discussion paper is that for a lot of these companies, MPS is actually quite irrelevant because even at the time of the IPO itself, they have a lot of public shareholding already. So MPS then becomes immaterial. MPS is essentially meant for your traditional Indian promoter-run companies, where even post-IPO, you would find that, promoters continue to hold 90 or 85% of the company.
All right. I also have a quick question for Sandeep. Sandeep, from a legal, standpoint and the legal implications, what mutual fund distributors, what should be, they be aware of with the introduction of these additional incentives for attracting first-time women investors? Because that is also a notable announcement that has been made.
Yeah, I think the idea is that distributors get more money out of it. So I'm not sure how it works because ultimately the women are going to pay the extra money. It's not going to come from SEBI's pocket. So I'm not very sure how it helps financial inclusion. But yeah, I guess it incentivizes the distributors to kind of take, charge a higher commission and if they get either women investors or women or any investor from smaller cities.
All right. Okay. So, Pranav, if I'm just going to come to you really quickly now. How are you foreseeing this impacting liquidity and investor confidence? Because let's remember, this announcement also coming in right after market hours. We're also seeing that announcement of the CPI inflation coming in. So, what are you expecting to see Monday morning?
Well, first of all, with regards to the dilution announcement which has been made, we need to put this in context. So this will actually have a very limited impact. Even just to put this in context, even as of today, there are just 10 companies which have a market cap of more than 5 lakh crores. Just 5 companies which have a market cap of more than 10 lakh crores. Even going forward, the impact of this will only be on 2-3 large IPOs. So it is not really a market-wide impact per se. Secondly, I also want to make a very quick point that, it has been said that, the market is not able to absorb large issues. However, the data shows otherwise. Even if you recall the Reliance Power issue, which happened back in 2007, it attracted subscription worth 7 lakh crores. Just a single issue. More recently, the Bajaj Housing Finance issue also comes to mind. So, my view is that if the issue is attractively priced, there would be enough money and enough takers for it. So that's as far as the dilution is concerned, and also as far as the liquidity in the secondary market is concerned. A lot have said that if a large issue comes, then it sucks out the liquidity from the secondary market. But if you look at again the last 5 years post-COVID, you've seen not only a huge number of primary market issuances, but also the secondary market scaling newer and newer highs. So it again shows that both markets can run parallelly, and it's not at the cost of the other.
Haldia, J.N. Gupta and Sandeep Parekh, thank you so much for giving us a pretty great insight. This is right after the SEBI made these notable announcements. Let me quickly go over to my colleague Jasmeet now, who's standing by.